What's up, everyone? Did you catch any sleep last night? Or were you too busy watching your portfolio bleed? I know yesterday felt like the end of the world, with all that AI fear-mongering, but today, the bulls are taking control again. Here is the bottom line. Yesterday, we thought AI was a job-killing monster, but today, we realized it's actually our most powerful partner. Market briefing from blood on the streets to green shoots. First, let's look at the scoreboard. The markets took a serious hit yesterday, but they've clawed back almost all those losses. The Nasdaq surged over 1%, and the S&P 500 is back near that 6,890 level. Even the Dow bounced back by 0.76%. Now, look at the screen. It's a sea of green. AMD went on a tear, jumping nearly 8 to 9% after scoring a massive AI chip deal with Meta. But it wasn't all sunshine. SanDisk got hammered, dropping over 4% after a brutal short seller report from Citron, claiming it lacks a technical moat. Also, keep an eye on the 10-year Treasury yield. It ticked up to 4.037%. But surprisingly, tech stocks didn't flinch, because the consumer sentiment data came in way stronger than expected at 91.2. Main issue: Anthropic. The chef's tool, not the new chef. Now, here is where it gets interesting. The real hero of the day? Anthropic. Everyone was terrified that their new AI tools would wipe out software, giants like Salesforce and Intuit. But at today's enterprise event, Anthropic basically said, "Relax, we're not here to replace you. We're here to work with you." Let me give you a metaphor. Think of AI as a high-tech vegetable cutter. Yesterday, investors thought this machine was going to fire the master chef existing software, but today, Anthropic showed it's just a tool the chef uses to cook 10 times faster. They announced partnerships with Salesforce's Slack, Intuit, and Google's Gmail to integrate AI agents, rather than replace the platform. It's like a smart GPS. AI isn't tearing up the roads. Existing data infrastructure, it's just showing the existing cars the fastest way to get there. This is why Salesforce jumped 4% and Thomson Reuters surged over 11%. However, there is a storm brewing in D.C. Defense Secretary Pete Hegseth just put a gun to Anthropic's head, giving them until Friday evening to grant the military broad access to their models. Anthropic is worried about their AI being used for autonomous weapons or mass surveillance. If they don't play ball by Friday, Hegseth threatened to label them a supply chain risk or invoke the Defense Production Act. This is a massive story we need to watch this weekend. Investment strategy: how should we play this? So, what's the game plan for us retail investors? 1. Hold your quality. Software today proved the AI death narrative was overblown. Companies with deep-seated data, like Salesforce or FactSet, are staying relevant by partnering with AI, not getting replaced. 2. Be careful with memory chips. SanDisk's fall today is a warning. Analysts are starting to worry that memory prices are peaking, and that customers might start resisting these high costs. 3. Wait for the king, Nvidia. Tomorrow is the big one. The whole market is holding its breath for Nvidia's earnings. Expect 68% revenue growth, but the guidance on their new Vera Rubin chips will determine if this rally continues. 4. Watch the guidance. Look at Workday. It's down 8% in after hours because its subscription guidance was slightly weak. The market is being extremely picky right now. Good isn't enough anymore. It has to be perfect. Closing the big Wednesday ahead. Tomorrow is a massive big day, with Nvidia's report and President Trump's joint session speech to Congress. Trump is expected to talk about his economic wins and potential new housing or tariff policies. Stay smart, stay invested, and don't let the daily noise shake you out of your long-term winners. If you found this helpful, smash that like button and subscribe. What do you think? Is AI a friend or a foe to your portfolio? Let me know in the comments. I'll see you in the next one. Peace.